morning, good afternoon, good evening, yWhales, wherever in the world you are today. So it is July 13th, lucky 13. Bitcoin is sitting around 30,500. It's been an amazing rally over the last really 60 days. We've seen so much amazing energy come out of this. People are stopping saying crypto winter. So relatively short. I heard somebody say it's crypto autumn. So we're starting to see things thawing and kind of moving back and forth. Tons of innovation around there. But I think there's a lot that we're going to talk about today that has to do with regulation, because you really can't do much in development. You really can't do much in deployment, and you really can't talk to the retail traders at all until we understand what the rules of this game are going to be. And right now they're in flux, and there's a whole lot of articles that we're going to run through today. I have some amazing guests that I'm going to let go ahead and introduce themselves. So we'll start with Abe and go from there.
All right, thank you for that intro, Jay. My name is Abraham. I am the head of ecosystems at yWhales, and I sit within the labs division, sort of an incubator of ideas that are spurred up from our community members of 1,300 CEOs and chairmen around the world. Currently, we are building a platform that onboards businesses into the Metaverse in stealth mode, MVP coming soon, so stand by, everyone.
Awesome. Jeffrey.
Hey, guys. Great to connect or reconnect. My name is Jeffery Ugbah. I'm a director within Galaxy Digital's advisory practice. And so I cover everything Web3, Web 2.5 to Web3. So that includes things like gaming, both Web 2 gaming, Web 3 gaming. That includes 3D content creation, NFT ecosystems, and all of the above. And so really great to be here and really excited about the conversation.
Excited to have you. Florian.
Hey guys, super happy to be here. I'm Florian from Common Ground. We're building the Web3 communication platform for communities. I'm a lawyer by trade, so I also do some advocacy in the European ecosystem, talking to the European regulator to make sure that crypto, Web3, now even Web4, I don't know if you guys heard it, is going to be a good thing in Europe. So that's me. Thanks for having me.
Or, listen, let's get Web3 established, and then we can start working on to 4 and 5 and 6. But, we still haven't gotten out IP6. So we're still on IP4. So there's still a lot of upgrades that have to happen. Let's go ahead and kick this off. In Web3, which is the one we're still currently working on today, AI is absolutely part of the next iteration of the internet. And so I think Elon, who likes to make some big splashes, likes to throw some big amounts of money into some projects that probably would take, in most cases, years to develop. He can accelerate that with his network and his stockpile of cash and resources around there. So he has launched X.ai. This is not a part of any of his existing X dots, or what is Twitter now relabeled the X dot app. This is an entirely new AI based division. And the quote is that he is to try to understand the true nature of the universe. It sounds a little like, sounds like a movie, sounds a little bit abstract, and that's very Elon-esque. He has hired some extremely competent people in the AI field. He has, quote unquote, been acquiring hardware for quite a while behind the scenes. And I think it's relevant to note that he already has a massive AI team at SpaceX. He has a massive AI team at Tesla. And so he's been a big proponent of the government to try to regulate and really understand AI for quite a while. Abe, you've been following this for a minute. What's your thoughts?
Yeah, I think there's good and bad sides to this. I think we'll start to learn a little bit more as news and information starts rolling out. But I'm not sure if I'm comfortable as the bad side with Elon being the chair and running this, given his recent operations. But I do have a concern with the risk of control of power. So I think another entrant into the space might give a little bit of a balance or a battle. So I think that's the good side of this. Because, is it going to be concentrated with corporate power? And then is it going to fall into a concentration with just a few governments? I think this is a really sensitive space that we have to operate in. And so those are my initial thoughts.
Awesome. Jeffrey.
Yeah, I mean, I think, with Twitter especially, it's very clear in some of the restrictions that Elon has now instituted in terms of scraping that historical database for feeding other LLMs. The real competitive moat and competitive advantage is going to be how much information, structured or unstructured, are proprietary to individual organizations. And so I suspect it's almost reflective of a trend of, if you have a lot of data, if you have a massive data set that has been processed or hasn't been processed, it's going to become incumbent upon you to augment that data with some type of AI-driven components, such that you yourself control not only the inputs, but also the outputs in terms of who has access to it and who can derive insights or analytics or, data points that can be used for business or economic or regulatory decisions. And so I think
that's so relevant the way you put it, because with the combination of having Twitter and also, like, really think about, he's got, millions of Teslas that are out on the road, with cameras doing so many things. That Twitter is really the first alert system around the world. I don't care what other social media platforms exist. They know about every incident, traffic accident, like anything that happens, in real time. And Elon has proven to be probably one of the best users of AI, because, the Tesla self-driving, while it's not perfect, is way more advanced than anything else out there. We're seeing SpaceX rockets land themselves, and there's no one even close. The European Space Agency essentially doesn't even have a rocket anymore, and Elon is, moving in vastly faster iterations of his, thanks to AI and everything else. Florian, what's your thoughts around this?
I feel like Elon is playing catch up, which is funny because he is such a leading thinker in all these categories. But then I think he was sort of surprised by the fast adoption of OpenAI. Obviously, the acquisition of Twitter was definitely driven by this, I think, desire to possess a data source like Twitter. So I'm sure he has been planning this move for a while, but I do feel there is a little bit of playing catch up. And what I'm way more excited about than X.ai is what the open source space is producing for large language models, right? We've seen Falcon 40 billion, which was produced by Abu Dhabi, which is interesting. We see other models performing really well on Hugging Face that are open source. So I feel Elon has lost a little bit of leadership here, which is surprising given everything that you said. He's such a big AI heavy user in Tesla and so on. So just excited to see how this will play out. What I found a bit lame was him sort of pushing this narrative of let's, impose a moratorium on AI development, which he did, in this open letter, sort of pushing government to regulate, because it felt like, well, he just wants to catch a break in order to catch up with everybody. So yeah, I got mixed feelings on Elon when it comes to this.
I'll give him just a little bit of credit. He did put the first $500 million into OpenAI, which was designed to be, open source and everything else. And somehow they converted that to a for-profit and then turned around and sold it to Microsoft. And he was very vocal about, suing OpenAI for that move. So it may not be as much catch up as it is catch up, but it's because, he put money in and it went to the wrong, he didn't want Microsoft. He never would have approved Microsoft acquiring that. And we've actually seen some really significant deprecation of ChatGPT since Microsoft has now gotten their hands in it.
I guess it comes down to incentive, right? What's his incentive here?
Yeah, well, he figures out incentive after he figures out what he wants to do. It seems like. So jumping over, there's some big moves, and we're talking about IP and access. Let's talk about Microsoft yet again. So Microsoft is trying to acquire Activision, and instead of me trying to explain this article, Jeffrey, why don't you go ahead and go through this, because this is exactly what you do every day.
Yeah, no, for sure. And so this Activision deal has been in the works for quite a while now. And it really is part of Microsoft's strategy to better compete with Sony Interactive Entertainment, who, won the previous console generation, before that, and is on track to win the current console generation. And so I think Microsoft's primary thesis is we need more studios producing video games that already have large install bases that, we can further monetize, perhaps incorporate into our own kind of Netflix-like games as a service platform, and take it from there. there's a lot of concern in the industry that this deal isn't good for gamers and players and the ecosystem as a whole, based on the treatment of and really the productivity and the execution of a lot of the current studios under Microsoft's purview. So, for example, Microsoft acquired a game development studio called Bethesda back in, I believe, 2020 for $7.5 billion, which at the time was either the first or the second largest transaction in video game history. And that company has yet to produce a new video game in that same time period. And so the upcoming title is called Starfield, which may release in 2024, may release in 2025. But there's an undercurrent by the community that, this acquisition will create a little bit of a chilling effect when it comes to really creative, innovative, game design, game development in the near term, which, depending on how you look at it, could be a good thing or could be a bad thing for the average gaming consumer.
And as an M&A guy, you understand that, the challenges of when you have a transition like this, the teams that are incentivized to work for their stock prices, they're incentivized to work for, the revenues of which their games would go. Suddenly, you're getting an EBITDA of, a few years. And there's a lot of the team that will just say, hey, I'm cool. I don't want to work for Microsoft. I don't want to work for big tech. They acquired Skype. And, when COVID came down, the fact that Zoom, took off by multiples of 100, and no one and Skype, which has been around forever, like nobody cared to use it for education or for anything else, just kind of showcases that it doesn't matter how much money you have, doesn't matter how many machines that you have out in the world. If you're not a good innovator and you're not a good marketer, which Microsoft is not anymore, you really can hurt some of these products, no matter how futuristic they are and how good of teams that they had when they were acquired.
Yeah.
Abe or Florian, any comments on this?
Not really from my side, but it's really questionable whether we should allow big corporates to sweep up complete markets like this. So I'm definitely pro more competitive policies here. That's my general stance.
That's going to be my same too. Is now it sounds like we have three big players in the gaming industry, and it's Tencent. I think it's number one, Sony, and now Microsoft. So what does that mean for the user experience and for competition, just generally speaking?
Yep, absolutely. So we're just going to be bouncing around all over the place. So Bank of America is stating that they are not directly closing accounts that are linked to Coinbase. There was a number of users saying, hey, my account at Bank of America was closed, and the reason stated is because it was linked to cryptocurrency trading, meaning that they had, when you have a Coinbase account, you can link your bank account so you can move money both in and out, relatively native. It's generally through their ACH platform, so it goes relatively quickly. It can take a couple hours, a couple days, depending on the amount. But people were complaining on Twitter that this was happening. Brian Armstrong ran a poll. It showed that most people, it was not happening in a broad way, but it was, a lot of people said yes, it did happen. Bank of America, said no, they're not doing it. I believe that they are. I think that this sounds like something that they would do. So Florian, you, as a lawyer, what's your thoughts on some, this anti-competitive nature here?
I mean, let me first share my European view here, because I guess that's something I can contribute here, which is that in Europe, this is a really known problem, in particular for companies. I know that it's also happening for consumers, that banks close accounts where there is just a lot of, crypto-related activity on. What I find just as drastic is that nowadays, in 2023, when you think that, okay, the EU has passed, comprehensive legislation on crypto, it's assumed to become a major industry in Europe, banks are aping in, all these things, but startups still have a hard time to find a bank that is willing to open a bank account for them. If in your sort of, company purpose, you mention that you are touching cryptocurrencies. So today, as a crypto-related or Web3 startup, you still try to avoid the appearance of having anything to do with crypto. Banks still believe that it's shady business, that it's money laundering, terrorism financing. And that's pretty depressing, and just shows how much banks need the competition and the disruption from that very sector in order to become more business and future friendly, I would say.
And I completely agree with a number of things you just said. I mean, this is the next evolution of banking, and the first major institution that adopts blockchain technology. And I'm not saying adopts cryptocurrencies, because I think most cryptocurrencies are relatively garbage, but adopts blockchain into the way that they operate and opens up to a more free and fair market. I think is going to have a vastly bigger advantage than the rest of their competition that is just reliant on the old SWIFT system and being able to say, you know what, I'm just going to close you down. I'm going to restrict access. I'm going to do these types of things. We see it quite often, as CEO of yWhales. When we want to open a bank account, we do it in pairs, because if you're going to go through the pain of a 6+ month process, and that's what it can take, you might as well go ahead and open 2 of them, because we had a great account. Took us 6-7 months to open at Silvergate, and thankfully we had a backup, because when things went bad, we didn't have 6 months to get another account open, and we were able to transfer funds, preserve investors' capital, and there you go. But it is that hard to work in this industry right now.
It is crazy. What I'm really stoked about is the future, really, where you can have a Gnosis safe multi-sig wallet on chain, and then attach legacy payment channels to it. But the multi-sig is your main account. There is a company called Monerium from Iceland, which is offering basically IBANs for multi-sigs. So you can actually send out and receive euro payments from your safe multi-sig through Monerium. And now Gnosis is actually offering credit cards called Gnosis Pay, which allow you to actually spend the money directly on your multi-sig. They've partnered with a company called SaltPay, which is a global payments processor. And the mind-blowing thing to me is that you can define spending rules for these different credit cards as an organization, for example, and then have employees have a monthly budget of $1,000, and then the CEO maybe a bit more. So you can have these really intricate organizational rules mapped onto the credit cards through your multi-sig. Like, that's the kind of stuff I want to do when I think about digital banking, and that's what the crypto sector is actually bringing now. So the banks will have that competition really, really soon. Gnosis Pay is launching next week in Paris at SCC. So yeah, stuff is getting real finally.
Awesome. Yeah, no, I'll appreciate bringing that up. We'll definitely have to test that one out. Moving over to some music news. Snoop Dogg and A16Z have partnered up. So Andreessen Horowitz has led a $20 million round into the Web3 music platform Sound. He's partnered with Ashton Kutcher from Sound Ventures, and the entire goal is to disrupt traditional music streaming revenue models by allowing existing artists to mint their songs as NFTs and then sell those directly to fans. They've been around since 22. They've generated about 5.5 million, which is almost nothing in the global scheme of things. But I think it's interesting, and I've talked to maybe a half dozen startups that have been working on this problem that all have the same solution, that they're going to allow direct access through smart contracts and NFTs, that someone's going to mint their song and then push it out there and people are going to buy it. And I really do struggle with adoption on this, because we saw this before. We've seen Napster come out and say, hey, here's this platform that people can do it. It breeds theft. It breeds copyright infringements. Because if you don't have a centralized source like an Apple or a Spotify or Pandora that's kind of managing things, and even SoundCloud has, the ability to kind of take stuff down. If we're talking blockchain, once it's up, like, how do you take down all the Britney Spears songs that some random user put up, and they're immutable? So, again, Florian, as a lawyer, I'd love to hear your thoughts on, does this actually have legs, or is it a little bit of blockchain pixie dust that they're throwing out here?
Well, I have conflicting thoughts on it. First of all, the positive view I have is that it's a good signal for consumer crypto applications, right? Because in the past, there has been a complete lack of funding for consumer great applications in crypto. I think all the VC money, and A16Z was a big part of that, went just to infrastructure and protocols, which is cool, but it just won't bring mainstream adoption to the sector. And I think after a decade plus, we just need some real consumers in this industry also to be more legitimate for regulators, right? Otherwise, they would just regulate us to death. So I think in terms of crypto consumer adoption, this is a very positive signal. Obviously, Common Ground is also building a consumer-grade application. So, I hope this gives us some sort of credibility that now it's the time for consumer-grade investments. On the other hand, I agree with you, Jay, that there is not really a recipe that guarantees us that this is going to work now, specifically for music. I've recently talked to a big record label in music, and they are looking at this, but they are not sure that this is actually going to work. So they're sort of still on the sidelines with this. I know that this is one of the oldest ideas in crypto. Actually, in 2016, Consensus was working on a platform exactly like this. It was called Ujo Music. Imogen Heap was releasing an album on it, and it just didn't go anywhere. So I think there is a lot of sort of failed attempts at doing it. And, looking at SoundCloud, which was sort of, still is a German company, one of Germany's biggest successes in sort of digital platforms, they've completely failed. They never found a business model that actually works. They're really struggling. And so it's, big question mark here whether Sound XYZ has found a viable business model, but I do wish them the best.
Yeah.
Jeffrey, this is right in your wheelhouse.
It definitely is, and it's a very tough model to be successful with, because you're trying to solve two product market fit questions at the same time. The first is, how do you get actual creators, musicians, etc., to agree to participate on this platform, and the friction surrounding the education of using this platform versus going a more traditional route. And then the second is the most important piece: how do you get actual consumers and users of music in general, but these artists in particular, to want to jump onto this platform versus, showing their allegiance or showing their, amount of community to a specific artist on the myriad other channels that we do have available. And so I've seen this, very similar to you, Jay. I've seen this model, come through on several different occasions. I think trying to attack it from an infrastructure level, I think does make more sense, but I'd be curious to know what the unit economics actually look like for a business like this.
Yeah, I like when I think of this, I always refer back to Tidal. All the right people launched, hey, we're going to be different because we're going to have the highest fidelity music, the same price or whatever in the world they were doing. And they've since gone to this freemium model. They're struggling with app downloads. They're struggling to do this. And there's no blockchain in there. So, to me, until you kind of have one of the leading players say, here's how we're going to use this to solve copyright. We're going to use this to solve royalties. If Spotify was to say, hey, we're incorporating blockchain technology for royalty distribution, to me, that, stop the presses. There you go. It's now it's going to happen. And other people can kind of copy that formula and make it happen. To start from the ground up and saying we're starting with Snoop, and great, nothing against him, but I mean, he's still just one player in this massive industry that has systems, processes, and tools that exist already. I think it's $20 million, doesn't even make a dent in what it takes to deploy one of these things.
Yeah, and I think, Jay, you're saying the loud part very quietly, or the quiet part out loud. It feels like when it comes to the application of new technologies into the music industry in particular, there's some pretty active behind the scenes suppression going on to not disrupt existing, flows of value or flows of capital that have been in existence for the last 30, 40 years. And, one of the things that this actually leads me to think about is, a couple of months ago, there was a lot of press and a lot of media attention to the fact that AI was being used to create, essential replicas of Drake's music portfolio and songs that were actually very good. And what surprises me today is we haven't seen a single, new piece of work generated by AI that has been released, since that time, right? The technology still exists. The portfolio the portfolios of music still exist, but the application isn't there. And I'm guessing that something going on behind the scenes, to put my tinfoil hat on, to say, hey, we're going to shut this down the second that we see it, so that it doesn't, disrupt our current modus operandi.
Yeah, like I said, always follow the money. Jumping to the next one, Gamercraft raised $5 million for an AI-powered skill-based gaming platform. Jeffrey, you're gonna have to explain this one to me.
Yeah, for sure. So I don't know how many of you guys are gamers. I'm a pretty frequent gamer myself, especially online shooters, and so my game of choice is Overwatch, which is like a 5v5 shooter. Long story short, one of the biggest issues in online games today, so think Fortnite, think Counter-Strike Go, is the fact that you usually don't have a great experience playing these games for one very specific reason, in that you can't find the right set of other folks to play with that are within your range from a skill set perspective. So if I come into a game, what usually happens is the competitors around me are either extremely terrible, which means that, I would just roll over them, or a person would just roll over the entire team. That does not make for an enjoyable experience. On the flip side, if you jump into a game and everyone is so much better than you, that's also a very unsatisfactory experience. And so there's a Goldilocks zone of, all right, these players are good enough for this to be competitive, but not so good for this to be, disenchanting for me. And so this is where Gamercraft comes in, where that challenge that a lot of the AAA developers and publishers are experiencing are solved by this platform. And it's used to make sure that you're properly segmented with folks of your equal skill set. The other advantage of this platform is that, from a cheating standpoint, you can actually identify and remove cheaters, and actually kind of segregate them into their own kind of gaming instance, so that all the cheaters play by themselves, all the folks that are of the S-class level play with each other, all of the A through C class play with each other, and it becomes an overall kind of great gaming experience for everyone. So this one is definitely very, very near and dear to my heart. It also reflects the fact that, the private capital markets are a tough place to be, especially with, where things on the traditional and kind of the Web3 side have been, and, very excited to get this one over the finish line.
Yeah, and I think that's a really good, interesting use for AI. And I can speak from experience. I like to play Call of Duty with my two boys. I've got a 16-year-old and an 11-year-old, and they're both vastly better than I am. And when my 11-year-old literally just last night said, "Oh, Dad, why don't you be the host?" Which means that it's going to be my skill level that dictates what party we went into. I think we finished the one game. I had 24 kills. The next top person on any other team was maybe 30, 35, and he had 124. And it was like everyone on the other team was just rage quitting. He was that much better than everyone else because they play competitive. And let me tell you, the next game that it put us into, I think I got 3 kills, and he was on par with everyone else. So it seems like some of this technology exists, but it may be proprietary. And by the way, that was an Activision product, so that's what Microsoft's acquiring back from the earlier article we talked about. But I think these are really good use cases that will extend far beyond gaming and into various other aspects that potentially could be there, such as online dating, and really starting to define compatibilities that may be nuanced and something that you're not going to compete a 50 question survey to answer anymore.
Yeah,
love that. So jumping over, Binance Labs, who Binance is not short of anything in the news right now. They're investing $15 million in another Web3 gaming startup, Xterio. Abe, you want to walk us through this one, because you've been following it pretty closely.
Yeah, so they invested $15 million, and this is supposed to be a play to earn, I believe it is. Or sorry, actually, you might have to take this one, Jay.
Yeah, so this is Binance Labs. So it's a Web3 gaming platform and publisher. They're introducing the integration of artificial intelligence and these Xterio tokens. They're facing obviously regulatory scrutiny, and Binance Labs is still continuing to invest, in growing their assets of investments to right now $9 billion. Does this sound familiar to anyone else we know? FTX, Alameda. Free-to-play gaming platforms, so gaming as a service. I think that's very interesting. We've seen kind of the play to earn, play to live model, and it seems like they're kind of going through and creating toolkits and creating platforms for this. So my number one concern is Binance investing in anything. The secondary concern is, quite simply, is play to earn, play to live, does it have a long life cycle, or is it kind of something from the last bull run that just kind of has petered out?
Yeah, and maybe I can.
Yeah, sorry.
No, please,
yeah, please go ahead.
Please go ahead.
Well, I just can add that Sega just less than a week ago announced that they are scraping their efforts to publish a play-to-earn game using crypto. So this is the exact opposite move to Binance, which is interesting because Sega obviously has a long-standing experience in gaming. They know how to build successful games, and they've had it under development for a year or so and then scraped the efforts because I think it wasn't convincing to them. Me personally, I'm not an avid gamer in this stage of my life, so I shouldn't judge it, but I just don't see play to earn having a big future. What I think really the role of crypto and Web3 is going to be in gaming is this ability to make characters and items transferable between worlds, between games. Funny enough, that's exactly what the EU is going to pass some regulation on pretty soon. They call this Web4. I don't know why this needs any regulation. I just think this needs industry standards. But overall, I think that's what excites me. This idea that I can transfer money, or I can transfer game items or characters into different games from different publishers even. And funny enough, this is how Ethereum was founded, right? Vitalik had a character in World of Warcraft, which Blizzard decided to nerf, to kill. And that moment he decided to build Ethereum because he was like, it's not possible that I don't have ownership over my digital gaming assets. And so, I think this is just a really powerful narrative.
You said a quote, and it's pretty funny. And I heard somebody recently say, America will rush to innovate, Asia will rush to build, and Europe will rush to regulate. So it's kind of exactly very different standards. But Jeffrey, on this one, what were your thoughts?
Yeah, I have a couple of thoughts on this. I guess first and foremost, I tell everyone this, much to I'm sure my colleagues' chagrin. I'm very much long-term bullish, short-term bearish on, quote unquote Web3 gaming, because I think we tend to miss the objective of gaming in the first place, which is to have fun either by yourself or with others, right? And so, whenever I look at new opportunities or new, investments, I always try to understand, does this platform or this company have games that are out there that you can play, and are those same games fun? Like, can you look at a video on YouTube of somebody playing the game and you yourself see yourself playing the game itself? So that's kind of my first criteria when it comes to things like this. The other piece of it is I don't think that we'll get to the point where crypto is really well adopted until institutionals get into the picture and provide a little bit more certainty as to this is an asset class.
I thought that was me.
No,
I can chime in.
Oh, sorry about that.
I don't believe in the play to earn. I think once the incentive is taken away and the people have made their money, usually the first entrants that have come in, they move on. They move on to the next game where they can go and play to earn. And I don't think that it's going to be a model that sustains itself. But it's interesting because yesterday I was reading an op-ed by Josh. He's escaping me his last name, but he's the CEO of Surreal Events. He was talking about how businesses should design their presence in the metaverse, and I think the headline was, "Look at gaming." Like the stickiness factor of how games are created, to just engage and to have fun. Like that's what really wins, both in the business aspect of immersive experiences and how I believe that the gaming industry for Web3 will actually work out as well.
Interesting. So let's jump into a little bit of crypto news. I think this is a big one that's making its rounds, and there's a lot of FUD around it, which is what crypto and likes to do, is create a bunch of unknowns and whatnot. SilkRoad, which was I would say the original first mass use for Bitcoin. Whether like them, hate them, whatever the case is, I think the reason why we have a Bitcoin ecosystem is because there was a use case. May have been illegal back then. It's clearly been cleaned up quite a bit since then. The Silk Road founder is in jail. However, the Silk Road founder had, tens of thousands of Bitcoins that he had acquired. And I think that he had acquired them, in the single digits to double digits, back when Bitcoin was still ramping up, maybe in the hundreds of dollars. But the U.S. government has taken these. They have put, I believe, the gentleman in jail for 2 life sentences for his role in this, and they're now going through and saying that they're through the end of this year, they're going to be selling these off. There was a big amount of fear that happened in the market where people were concerned that this was going to drive the price of Bitcoin down. And I think they thought that the U.S. government was just going to create a large market sell order on Coinbase and hit sell and just drive the price of it down to whatever people were willing to buy. And that's not the case. We've since learned that these coins will be sold OTC. They will never hit the open market. The first tranche has already been sold and moved. We do not have counterparty knowledge. We've tried to figure out who bought them. I think we can take a few guesses based on Fidelity and BlackRock and others that are the big buyers that have the cash to do so. And we don't know what price they bought them at, but the coins have already been transferred. They have moved wallets. So the FUD on it, that's driving the price of Bitcoin down, certainly goes away. But I think it now increases, these ETFs and institutions that have acquired these Bitcoins in a big way. Florian, you're a Bitcoin guy. What's your thoughts?
Well, I just wanted to make the joke that we can now use Arkham to find out who the counterparty is. No,
that's a good one. Well
done. No, I mean, nothing really to add here. I don't think it matters that the government is selling them off. I'm actually impressed by their diamond hands. If anything, they held onto them for a long time. And yeah, other than that, I don't think this is a bearish or bullish signal for Bitcoin. I am a believer in the long-term value of Bitcoin. So yeah, just happy that there are more Bitcoins hitting the market. So good for us.
Yeah, no, absolutely.
I'm surprised they're not holding on to it, to be honest with you. But
you know what, They just sold almost 10,000 of them for $300 million. Yeah. We know where the U.S. economy is right now, so that money is gone immediately. Yeah. I agree. It would have been much more worthwhile for them to hold on to them. Probably move them into Treasury or do something like those lines. But I'm going to go with I don't care that the U.S. government owns or holds these things. So I agree with Florian. Let's get them out into the open markets, less central control, because I think that all that would happen is, more nefarious things can and would occur as time goes on. Let's continue on with regulation. We'll keep going a little bit in the United States, and foreign, I'm sure we'll have some EU type things. In a big news, U.S. Senator Cynthia Lummis and Kathy Gillibrand, who have been, I think some of the most vocal U.S. towards the regulatory adoption of cryptocurrencies, doing so much to compared to Elizabeth Warren that just throws out some nonsense and says she hates it and it's terrible and it's for criminals. And we're seeing a lot of good common sense regulation coming through Cynthia and Kirsten. So the new bill classifies as most digital assets as commodities, so similar to gold. Amidst these ongoing debates about the future of digital asset regulation, the bill aims to bring clarity to the industry, which we all need, which is certainly uncertain about whether this SEC or the CFTC should be overseeing these cryptocurrencies. I would absolutely love to see this get away from the SEC. We have seen massive abuse by Gensler, and flip-flopping around in various aspects of this. I think the CFTC is the right choice at this point. If passed, the legislation legislation would require crypto exchanges to keep customer assets in third-party trusts and prohibit proprietary trading. And let's take a quick pause and say what they mean. The concept of self-custody is one of the most basic aspects of Web3, that you can not your keys, not your crypto. And what they're saying here is that these have to be held with authorized custodians. So similar to a bank, some sort of financial institution, or a registered investment advisor. So somebody would have to have a license to hold these. And I don't agree that with it being 100%, but I think there absolutely is a need for majority of people to have an option to use a registered custodian that is not the exchange, because we've seen what happens when the exchange goes down. You kind of lose everything. So, who's got some opinions on this?
I mean, I can chime in from the European side, where we have this regulation now, MiCA, and we had delegations from the US coming to the European Commission asking them, how did you regulate it? What's Europe doing about it? And funny enough, just when, the sanctions against Russian oligarchs were being set up in the European Parliament because of the war, there was sort of a half year time where there was the danger that the European Parliament would actually make self-custody flat out illegal in Europe, because self-custody has all these empowering features that benefit both, law-abiding citizens, but also people who want to, maybe evade sanctions and this and that. And it took the combined effort of the whole industry to get that idea out of the head of the parliamentarians that self-custody should be banned. So any attempt at reducing self-custody is, I think, akin to, reducing some of the fundamental freedoms that Americans enjoy, that Europeans enjoy. So I think that's something we need to preserve as a value. And other than that, I think it's probably a good idea that the CFTC is getting more authority and the SEC less, just in terms of, the competencies that we've seen over the past couple of years. But let's not forget that also the CFTC is responsible for OOKI DAO, and the idea of using this concept of an unincorporated association for DAOs and making all the token holders liable for the actions of a DAO. So I think both agencies have good and bad people. The SEC obviously has Hester Pierce, which is the crypto mom. She's pro crypto. So tough to say without a clear rule book which agency actually is making the better decisions.
Yeah, and let's be clear, the U.S. is really slacking and lacking from the rest of the world's perspective on the adoption of blockchain technologies, whether that's cryptocurrencies, NFTs, or just anything around smart contracts. The United States gets a failing grade at this point for wanting to educate the staffers, wanting to educate the legislators on what these topics are, and really coming forth and wanting to drive innovation away from the United States. I know more founders right now that are leaving packing up their bags and moving their companies outside of the United States. Good, amazing projects that will absolutely succeed over time. And I think that's a real failure of the U.S. And so I hope that a little bit of this kind of helps settle that and allows some of those projects to stay. The United States is we built Web 1 and Web 2, and it's really sad to see kind of Web 3 just walking away. I know, Florian, we'd all be thrilled to come visit you over in Europe and spend some more time there. We were just in Zurich, and we were just shocked by how opening and welcoming the Swiss government was towards blockchain technologies, and had real good common sense regulation that was very easy to follow and very easy to kind of interpret by lawyers.
Yeah, I think Switzerland is the last sort of libertarian government left in Europe. The rest is becoming, way more than China, if you want to be a bit provocative here. So really happy that we have Switzerland. I'm also glad they are not part of the EU, because they sort of preserve this idea of a sort of liberal idea of regulation, which is becoming a rare commodity in this world.
Perfect. So jumping over, we're going to go to Google's quantum computer, because I think this is just interesting. And so we talk a lot about AI, we talk about a lot of the things we do. At the end of the day, it all revolves around computing computing processing power. Bitcoin proof of work absolutely requires it. Every bit of gaming, if we're going to go to cloud gaming for Jeffrey, we're going to need more processing power. And we've been hearing about these quantum computers for a while. Google, again, mass amounts of money. They've been working in the AI space and the quantum computing space. I've heard of them literally that there are containers like at the bottom of the ocean that because it's using cooling that nobody really knows what it's doing. They just dropped them down there for a few years to see what it's happening. So this is something very near and dear to what they do. So the Sycamore quantum computer has 70 operational qubits. I don't even know what that number equates to. Can perform certain calculations much faster than the most traditional classical supercomputers. And the benchmark is calling for random circuit sampling, whatever that means. So they're saying that they can do in a couple seconds what traditional computers would take approximately 47 years. Abe, we spend a lot of time on how we can process, 3D and immersive environments, using cloud this. I mean, we need a big jump in computing power, but with that comes,
maybe not
just the same amount of terrifying aspects of AI and everything else to be able to do these things.
Yeah, this was an interesting article that I read too, and I dove into it to understand this a little bit more. The question I had was, when is it fast enough? Like, you're now doing something in seconds that a computer could do in 47 years. But yet this computer still has a lot of has a lot of issues with the environments. So what I understand is that these environments are super sensitive, and there's a lot of failures that come out with the processing power. So is there going to be a shift where, all right, we're now fast enough, and so let's really focus on the environment? I had no idea that they plunged these deep in the ocean. By the way, that sounds really phenomenal.
Yeah, there's a lot of these black boxes that the big guys, when you've got so much money, they throw a bunch of hardware in there, they run the power to it, and then for cooling, they'll throw them at the bottom of caves, they'll throw them at the bottom of the ocean, and then just see what happens.
Yeah, what I understand, it has to be a fraction of a degree above absolute zero in order for this to just be optimized. Like, that's so specific.
I think I saw that in one of the Transformer movies. So.
I guess my question would be, people typically don't engage in these types of endeavors, these really deep technological, transformations without some type of benefit. So for what purpose would we need that much compute resources would be my question.
So I think it's really about simulating quantum systems that this is really good for. And quantum systems is everything that's small. So, for example, for drug discovery, simulating, proteins or even, smaller chemical compounds, there you can have quantum effects where this is really beneficial. In order to break cryptography as we use it today on the internet, you need to be able to run Shor's algorithm, which is this, factoring algorithm. And this will need millions of qubits, literally millions. So we don't even know how to get there. This is really sort of far away. And it's, nothing, I think, immediately threatening. But I think sort of using quantum computers to simulate quantum physics is going to be probably the first practical application, which we might see in a couple of years or decades. So it feels far away still, but glad to see progress being made here.
Yeah, there's something I learned about crosstalk, which is the unwanted interaction between the qubits. And we're at 70. And so like the more qubits you have, the more complex it is. And so if you're trying to get to 1 million qubits, like that's quite something.
Yeah, this is going to be one of those things that is going to come out of nowhere. AI was around for 30 years and nobody really paid attention to it because it was, barely useful and you had to be a programmer to understand it. And now schools have to ban it because it just one day just started to work. And I think we're going to see something similar to this. It's going to be all of our computers are going to be vastly outdated all of a sudden because, they're just so much magnitude slower. They're not able to, host some new storage facilities or whatever the case is. Jumping a little bit back over to cryptocurrencies. So BlackRock, which is, filed for an ETF, they own, quite a bit of Bitcoin. And Vanguard is one of the second largest in the world. And they're taking a slightly different approach. They have now invested over $500 million into mining companies, Bitcoin mining companies. So they made a very large investment into Riot, one of the largest mining companies in the world. And I love this. I think this is so much better than just buying the raw Bitcoin, because they're now making sure they're putting the investment to make sure that the Bitcoin network is up, stays up and running, and they still get their Bitcoin over the long term because they are the miners. They, now doing it a few months before the halving probably won't look great on their balance sheet in the near term. But I think it's great to see the institutions getting behind Bitcoin. I attended Ethereum Denver. I've attended Bitcoin Miami, and I will say that they are just vastly different conferences with vastly different, attendees for the most part. And Bitcoin really is, has to have that heartbeat for the rest of the industry to survive, in my opinion. Jeffrey, what's your thoughts?
I agree. And I think that this is really the first domino that needs to fall prior to other, non-traditional, financial services companies and more consumer oriented companies to start embracing crypto as a method of payment. I think about gaming all the time and how seamless it would be to be able to pay for Robux, for example, with Bitcoin or Ethereum versus using, dollars on a credit card. I don't think that paradigm can emerge until there is more institutional adoption, until that BlackRock ETF and some of the other ETFs that are being submitted are approved and are actively competing against each other.
Yeah, fabulous. And speaking of BlackRock, they have filed their ETF. Their ETF will use Coinbase as a custodian. And so hearing that Bank of America is closing Coinbase based linked accounts is very curious compared to BlackRock, the largest investment manager in the world, is coming forward and using them. And at this point, Coinbase stock is in the toilet. I think it's $90. It IPO'd right around 300 or something. So they've been struggling along with everything else. But the spot Bitcoin ETF that BlackRock has filed for gives regulators the ability to pool specific data, including personal identifiable information, as well as customers' names and addresses from the cryptocurrencies that are involved. So I think that's pretty interesting. And it's not, this is a regulated asset. So it's very standard. If you invest with, Robinhood or E-Trade or anything else, the regulators have that same amount of access. So it being in here, I think is kind of a non-story. But it kind of goes back to a lot of people believing that Bitcoin is privacy. It allows for kind of financial freedom. I don't think anyone would ever confuse an ETF with spot Bitcoin custody. Jeffrey, what's your thoughts?
I agree. You can't redeem the units of this trust for actual Bitcoin. And so the fact that your information is shared with whatever brokerage that you're using to purchase, ETF units or ETF shares, it is definitely a non-story in this case.
Yeah, we'll get that established. So layer twos, to me, I think are incredibly interesting. Layer ones, every single one of them are struggling, in one way or the other. Ethereum, it's vast amounts of upgrades and changes over the last couple of years, but still can't reach scaling speeds to match Visa and everyone else. So layer twos are required. We've seen Starknet now. There's a lot of people that are very interested in this. They just got the community to approve moving forward with their Gorilla testnet. And I just think it's interesting to watch that 98% of their active users voted to go forward. And to me, these are going to be needed, and it's going to be a chain agnostic world. Some people are going to use this, some people won't. At the end of the day, you have to be able to span a lot of these chains and get institutional adoption. Otherwise, they just sit there doing a bunch of nothing. Florian, what's your thoughts on this one?
Yeah, I think layer twos are important. Obviously, the Ethereum ecosystem has decided to go all in on layer twos, and one of the big reasons is to be just more apolitical as a settlement layer, because if nobody settles any, controversial transactions on your layer one, let's say, prediction market that is being used as an assassination marketplace, for example, which are things that have been floating as an idea in the crypto space since, I guess, 10 years. But if they do it on layer twos, and the layer two only borrows the security of some layer one, I think this is a politically stable and scalable solution. Obviously, it also helps with technical scalability, and so I think it's important. I don't know if we need as many layer twos as we're sort of seeing popping up today. I feel VCs are allocating too much capital onto it because they don't know what else to fund. I think they should fund consumer crypto apps more, which I think they're not doing enough. But it's layer twos all the way at the moment. I'm fine with layer twos. I'm even thinking about layer threes. I think this will also be a thing at some point. So yeah, and the Starkware guys are amazing people, like Eli Ben Sassoon and Udi, which we see here on the pictures. They've been cornerstones of the market, and I think it was Eli who gave Vitalik the idea to found Ethereum back in 2012 when Vitalik was traveling around the world. So yeah, they are good people for sure.
Yeah, I really, it's so important to have this, but I also want to always state to people, these are like, if they say the word that these are in beta testing, I mean, they're almost still in alpha testing. Like, this stuff is like bleeding edge technology. They're using new techniques to scale. The bridge and the bridges don't work. There's very few bridges, and I say that's the two biggest issues in blockchain right now: bridges and wallets. And so I think that these are much needed steps. But I always tell people, before you go put a bunch of money or start utilizing these chains, no matter how cool or flashy they are, really understand how early we are in this cycle of Web3 right now. Jeffrey, I'm sure you see a lot of this.
Yeah. It's something that, we've been keeping a lot of attention on, but really picking the winners is very challenging. And I definitely agree with Florian. I would love to see more investment in more consumer facing projects that are out there. It's always a question of, okay, what is the size of the TAM from the perspective of these investors? And until we can get that institutional adoption piece, it'll be hard to really come up with a meaningful TAM for that to happen. Perfect.
So with the thawing of crypto winter, that means all of the YouTubers and fortune tellers have shown back up, and they're now starting to say Bitcoin will be at 120,000 by the end of next year. I think these are all gambling predictions at best. Nobody understands where the market's going to be, where regulation is going to go. I love the thought of $120,000 Bitcoin, but that would put the market cap at, just the market cap for Bitcoin alone would be something equivalent to like $5 or $6 trillion, which is more than double the highest the entire cryptocurrency market has reached so far to date. I don't think that we have the fiat on and off ramps, and we certainly do not have the use cases for Bitcoin to hit that much. So unless we know we're going to see a bump from the halving, that's all that's going to go there. But still, to go from 30,000 right now to 120,000, that's a big hurdle. And remember, during the last bull run, we were being told $1 million by the end of last year. So it's I don't put too much into these. Abe, what you watch all these?
Yeah, no, same with you. I think it's a gambling prediction. But Florian looked like he was going to jump in there. I think it's really hard to predict what it's going to be. And I think the market is totally different now, with institutional investors now pulling in. And then you have family offices and particularly coming in from Europe and Asia as well. So I think this market is going to look different than what we just experienced.
I think there are two strong arguments to make for Bitcoin why it will reach this sooner rather than later, and probably even more, which is that from an American perspective, Bitcoin is the only commodity-like cryptocurrency for sure. It's the only one that's not even being discussed as whether it could be a security. Ethereum very much is. So there is a scenario where, in the next election, we have a President Warren or whatever, and she will, regulate everything to death, including Ethereum, and only Bitcoin will stand. And I think the other sort of bull signal for Bitcoin is that there's sort of a new community forming that is dethroning the old authorities of Bitcoin, the block streams, and the people like that. And it's all around a guy called Udi Wertheimer and I think Eric Wall and a bunch of other people. And they really want to bring, I think, things like DeFi, things like NFTs, and other sort of innovations from the Ethereum ecosystem over to Bitcoin. They will bring layer 2s, they will bring rollups, they will bring all the good stuff that made Ethereum pump in the last couple of bull markets. And I think they are serious about it, and they will succeed. And so I do see a couple of scenarios where Bitcoin could get there pretty quickly. So I think it's wise to ramp up on Bitcoins at the moment.
Not financial advice.
Not financial. I over time, you start to look, you kind of look back, and I've done so many interviews, close to 200, podcasts and interviews and everything else that I've done over the last few years. And you start to think back to the people that made their predictions and who was right and who was wrong. And I'm just going to go ahead and give the one person credit that I think was the most right, which is Corey Klippstein with Swan Bitcoin. He runs swan.com. And he just goes, it doesn't matter. You just buy it every day. Don't ever sell it. Just if you want to spend $10 a day, $20 a day, $50 a day, just start accumulating, because we're so early in the cycle that, we don't know what the use case is. We don't know where it's going to be. And looking at where everything was from the last bull to bear rush, if you'd had a consistent amount, a daily amount or a weekly amount over the last, 3 years, you'd be up today more than you'd be down from just doing the random, pump and dump trading that most people do. So I think it showcases how early in the cycle we are. Ordinals has showcased that there are new uses for the Bitcoin chain, and that proof of work is still very, very valuable to the financial world. And we don't know. There is no winner yet. There is no global adoption in any way, shape, or form. All right, last one, and this is a good one for us. So Web3 developers left in mass over the last 12 months. I think we can say, yeah, of course they did. It went from, being, and Jeffrey, you can speak about this at length, it went from being an overfunded asset class to capital just quite simply drying out. We interacted with, dozens and dozens and dozens of development teams that really had, nothing other than they could deploy a smart contract that they were copying and pasting off GitHub. Very little nuances. There was a gazillion development teams that were, hey, I'll make you NFTs. I'll do so many things. But the real innovation, the real building, like those, I don't believe that those people have left. Do you?
I think, I would say, I would agree with you, Jay. I think that the folks that really see the long-term potential of the ecosystem are still here. I think that what you have are developers that might have more of a mercenary or more of a very much a, I want to generate as much personal income revenue as possible, going to other, fields to hone their craft. And so specifically AI, right? There was an interesting data point that I saw in terms of the average funding for developers in AI was somewhere between, 450K all the way to 925K for an OpenAI AI developer, right? And so if I'm making a trade-off and I'm a purely economic animal and I'm looking at, Web3 as a potential career path, but I don't really believe in the vision, and I'm looking at AI and I'm kind of weighing those two options in front of myself. In those cases, I'm sure that certain folks would probably lean in the AI direction, at least in the near term. But then again, AI is only used to enable or further augment existing industries anyway, which includes Web3. So it's a question of, trade-offs near term, long term, and whether or not there is conviction in the vision for the Web3 ecosystem.
The other point that I picked up from the article as well is that there's almost 8,000 developers that had only got into Web3 just within the last 12 months. So that's not stickiness. That's not people who are dedicated to space, just as Jeffrey was just speaking. This is people who are moving according to where the best opportunities are. So that's why I think, I'm not too surprised by this. I think it's just an indication of where we are in the market. And I think there might be a merger between the AI and the Web3 space. So I would be interested to see how many new developers are coming in just in the general space of being a developer as well. is that still a career path by early entrance into people who are coming into the working world?
Yeah, Florian, I mean, you are heavily into the development community. You're traveling around quite a bit. Are you seeing people just suddenly disappear and run over to AI, or do the committed ones still sticking around?
Well, what I see is that even the committed ones are really interested in exploring AI, right? Because AI is the shiny new tool. It's a lot of fun. It's become extremely accessible. Even Vitalik recently made a tweet, I think, on Farcaster about the similarities of cryptographic methods used in blockchain and used in AI, right? And for Martin Köppelmann, who is the founder of Gnosis, absolute, cornerstone of crypto. He will never leave the space. He's a deep believer. He's recently made a tweet saying, "Hey, should we try to build a prediction market now that we have AI, because we can use AI bots to do these prediction bets and sort of find interesting things to bet on and so on, and I don't know, other use cases he has in mind for AI." And Gnosis famously did their ICO in 2016 for prediction markets, which didn't turn out to become a thing, and now they are building multisigs and other things, right? So it has a history with him. And so I think everybody is currently experimenting with AI, and it makes complete sense because it will enhance probably every single thing that we're going to do. For example, now there is a lot of people. Paradigm, this big VC, made a blog post on it recently called "Intent-Based Architectures for Crypto." So the idea that actually we're changing the way we're doing transactions in crypto from imperative to declarative, just stating an intent. Hey, I want to swap that asset against this other asset, and I don't care how it's happening. Just make it happen. In a sort of with the best execution, promise, something like this. And now we see actually companies using AI as part of the process to build an intent-based architecture for crypto. So it's already, I think, flowing into the foundational concept of how blockchain is going to work, the application, how they're going to work. So yeah, but even at Common Ground, where we're building a Web3, focused communication platform, we have a lot of ideas of how AI can actually help communities to, be better at governance, be better at community building, retention of people, and things like this. So I'm not at all afraid of the competition of AI. I'm not surprised that a bunch of people that joined Web3, just when the market crashed, are now going somewhere else. I wouldn't blame them, but yeah, I have no concerns. I actually think AI is a great addition to the whole sort of stack.
I love, and what I really like about this is the thought of you have a bunch of people, whether they were good developers or just copying and pasting code and around, but they understand blockchain. And as they move into AI and they have to work with large data sets and they have to figure out storage and security and the ability that there's a better chance now that we'll see this iteration of Web3 truly embracing and incorporating AI through things like token gating and a variety of others, which would really kind of bring us forward. And I think it goes back to things like metaverse gaming, blockchain-based gaming, and really that's the entire goal. Is like cryptocurrencies is just like that first use case. It was the Beanie Babies of eBay. It's like, hey, this works. People are interested in it. We're able to kind of create a market based on it. But cryptocurrencies is not blockchain. The concept of blockchain and smart contracts and self-custody and all these other things, that's really what we need. And the more developers that understand blockchain and then go out into other asset classes, I think that's really the big win here in the way that I look at it. All right, guys, that's our hour. It's been absolutely fabulous to have you. I appreciate all the questions, comments, and insights that you provided today. yWhales, this is episode 2 of yWeb3 and Frontier Tech. We're excited to have you, and please comment in all the various areas for articles you want us to review next time. We'll see you next week.